Welcome everybody. I haven't done a video in a long time. We've been on, as you can tell, DEFCON 4 for our live trading room, our J-Person Asset Management managed funds, as well as personal trading. And quite frankly, we do an enormous amount of work in our live trading room. So really no excuse for you guys if you have the opportunity to come and visit our live trading room. Subscriptions are barely nothing, less than $150 a month. And for that, you can watch every recording we do. Everything I say is recorded. So give it a try if you're interested. Let me share with you a couple things quickly. And just to give you an idea, some of what we follow. This is one of the, and you'll see the tab right here. It says Razor Focus. We built a page for traders that subscribe to the Algo 17 and took a class last year and built this page out for them, which had a SPY system long only, a 60-minute long and short only, and we have not modified this because of it was optimized and it was built for a period in time prior to the big meltdown that occurred in, of course, March, this big meltdown. But as you can see, it's had a lot of little trades that it gets in. It has trailing stop function, so it's been active. The performance, just to give you briefly, and I guess the key takeaway is it went long on Friday based on a high close doji position. It was short, it reversed, it went long. It is currently in an active long position and covering this trade. Something, once again, we covered in the live trading room. So, in fact, one of my students actually pointed that out. This is the overall performance since January of 15. Again, it's a 60-minute trade. Equity curve from a period of July through December was inactive, but it's been a very almost stellar performer for us in how we back tested it. And so now the equity curve, when this position closes out, will be at a new all-time high. So that's kind of slick. All right, let me get into the trade room, our algo page. This is another thing that we follow each and every day, whether it's crude trades. You can see here's a crude trade. It gets in and then half position out. Now, TradeStation just raised the margin requirement on crude oil to about 200% of the exchange. The CME raised their margin requirement for traders in crude oil. And TradeStation, a company has the right to raise margin. They don't have the right to lower margin. So I think crude oil is one that for smaller size accounts, even though the price is less than it was at 60, the margin is almost doubled from back then because volatility has gone up. And I've been telling clients, trade other markets. And this is one of our algo moves that we talked about today in the room. It generated a short, took a clip, got long, got back on the horse, made money, got short, took a nick, went back long and traded it, but it max barred out. Now, why didn't it take any more trades? Because this model only trades in a slice of time from about 9 to 3 in the afternoon for a trade room. So the algos that we optimize here in the British pound, which also had a pretty decent day, once again, the algos are still working. Generated a short, had a long, got clipped before a big reverse, widen it, go in a new position. Same story. I only run programs between the hours of 9 and 3 because nobody's going to be able to trade stuff, and it's no sense having a system up when no one can trade it. Now, we do have positions, a couple things. The BXX went short. Now, let's talk about this for you guys because this is what led us to being a little bit more aggressively bullish in stocks because the VXX, the volatility index, went short last week, got knocked out with a profit. Blue lines are profits, red lines not profits. It went short Friday, which we talked about saying not many people want to take a short volatility over the weekend, but in this case, this was leading prices of equities higher when volatility was going down. So I'm kind of happy about this particular mode. The one thing that I wanted to bring to your attention, I think is most important, is a trade in the SPXL. This is a daily model that we allow all our clients to use, to look at, to review. It's taken some trades. And I wanted to just make sure that you could see, this is a daily chart. This goes back since the April of 16, so it's only 4 years old, but a pretty stellar, unbelievable performance right, as you can see, as far as its equity curve. Now, again, it was short the market, and we've been talking about this thing. It's been giving it up, giving back the profit. At one point, that one single trade on 300 contracts was up about $9,000, but it just bounced out on a dynamic stop function. There's 3 stop functions that we've programmed. My last conditional change, a dynamic, which is a function of last conditional change, a compression, which includes ATR, last conditional change, and time. And this one, it kicked out. It trails a stop on an LCC. It has a compression stop, or it has a dynamic stop. So it depends on the time, the length, the duration, and condition which stop gets hit. Anyway, more importantly, we're not just guessing and throwing darts. We use models to help us with particular trades in the game. So I just wanted to share that with you. What is really more interesting of what's going on in the market, a couple things that we at least look at our trade room and I want to share with you. We've been starting to build long-term positions up in the last 2 weeks. One, IBM from sub 100 level. Today we had a wonderful day. AT&T for longer duration. What's long-term to me mean? This is stuff that we've covered in our live trading room. I still think that there's a shot that AT&T, you can build up positions. It hasn't taken off. Some people prefer Verizon. I'm more of AT&T camp for the dividend, their PE, their book value. A few fundamental things. I just think the longer term monthly analysis to me suggests to build a position. Did I add to AT&T? No. And here's the caveat. While today's rally was nice, there's still a lot of stocks that are below my falling moving average. I've been teaching traders this. I mean, many educators have picked up on what I teach at these expos. You guys, if you've been around, you've seen me, you know. I'm just saying that my PPS indicator in the monthly basis is still in a sell mode. Now, this is TradeStation. That indicator can also be found on Thinkorswim, as many of you know. I would show you the Thinkorswim, but I wanted to get through today just to share with you what I feel is happening in the market and what you should be looking at right now. We are looking at some long-term trades. Technology, IBM, communication, AT&T, transportation, UPS, medical. Out of the whole world, we got a bunch of them. AbbVie in utilities. I chose American Electric Power. It was a toss-up Verizon. It was a toss-up in retail stores. Yes, I'm not expressly excited about Walgreen Boots Alliance, but it's a trade I took. And so, you know, there's I guess I'm not perfect. But when we take a look at other trades that we are in our trade, in our newsletter, in our portfolio, we have BABA on, which I think is going to see a potential move back up to the 210, 215 area. We double dipped a tad on I don't even want to talk about Bank of America because I went against my own advice and bought it at around 18 and 20 a week ago Monday. IBM, UPS, Bristol Myers, Dell Computers, not because people are working from home, but these guys build great computers. They have exposure to VMware, EMC under their belt, and guess what? They have huge government contracts. If you ever traveled, once people do go back to traveling, check out TSA, check out customs agents. Most of them with the government have Dell computers. GE only because, well, we've made a lot of money in GE over the last couple of years in this chop and slop. And when it was trading near $6, it was just pretty much an option premium. So why not? Walmart's another one of our trades, and we've been, I tell you what the trade is, to be exact. It's a 15-20 bull call spread, and when the market had a rally a couple weeks back, we sold against the call spread because we weren't getting enough of a profit because of implied volatility was so expensive. We sold an upside call spread to collect some premium to finance the trade. It's a 135, 140 bear call spread. So we have a 15-20 strike, the 115, 120 long, 115 short 120 calls. That's a vertical call spread, which would now be considered in the money. Against that, we sold a deep out of the money 135, 140 call spread. So we're kind of hoping the market doesn't go much higher in Walmart from here. Halliburton, because in the service oil sector, that was around $6, and it was. And actually, we caught it late because it went under $6, and that's another option price premium. You look at a stock that was at like $50 less than 2 years ago. What is their model? What do? They service oil rigs. And so what is the one product we still need? Well, we don't need maybe as much crude oil, but we need diesel fuel for trucks to ship toilet paper and wine to every store. We're still going to need to fuel diesel for trains. We're still needing transport ships which use diesel fuel. They don't have the electric lithium batteries that Tesla puts out yet. So again, while transportation's down, we still need to service rigs. And if we see recovery out of COVID-19, guess what? By the 4th of July, we're going to have one heck of a party because American and the world will celebrate. So I wanted us to wish everyone a happy, wonderful, joyous Easter, Passover holiday. Remember, God is good. God's in our life. It's good to pray. And I know a lot of people are praying for everyone's health, and I pray that you are both emotionally strong in this period of time. We will get through this. And just remember, not every company is good and not every company is bad. And we've got to make right decisions and use proper risk management. And that's what we teach in our live trading room and how I trade and put things together. I'm sorry for not putting out a free video for an awful long time, but literally this quarter was crazy, as everyone knows. I was telling people this is like market conditions were like in a war zone. If something's wrong, put a Band-Aid on it, move on. In other words, if there is a problem with a program, don't try to fix it and repair it during the open outcry session. Put a Band-Aid on it, fix it later. I do believe we have several things that have happened that were positive in the last few weeks. The advanced decline started to see some improvement over time, number one. And I'll share with you lastly what I'm looking for the rest of this month. I believe that tomorrow, Tuesday, turnaround, if we maintain a structural close greater than the monthly pivot, which is this blue line. Now today, my work shows that we formed a daily PPS and we did close above the monthly pivot, this blue line. That's very important from and what I'm expecting to see is follow through up to this resistance line in the sand. That's what I'm expecting to see. The market to see some follow through. The McClellan oscillator this is not the McClellan oscillator you're used to. This is the McClellan oscillator created in the formula of using the breadth off of the advanced decline from the S&P 500. This is my proprietary volume indicator, which shows the rate of change and momentum in terms of percent change of the volume actual. And you can see, unlike on-balance volume, which showed a lower dip in the volume reading, it made a new lower low. And I don't know if you guys can see this exactly, but here's a low, and that's a lower low. At the same time, my volume indicator made a higher low, bullish convergence. So that's why this was an important zone of support for me in the market. And the McClellan oscillator was leading us out of significant oversold conditions. So that was one of the reasons why we've been building up positions over time and scaling in, especially the stocks that I've already highlighted to you. Another thing I wanted to point out to you is looking at the NASDAQ a week ago, which we wrote about for all our investors. And I'm going to change this over to a weekly chart, and you'll see something. We had a market, and it shows up better here. Let's go with the, hold on one second. You're going to want to see this. This is important. In the futures, we actually started to see something unique, a higher high and a higher low. And also look at the McClellan oscillator, as it is another tool that we use, that we created using Sherman McClellan's work, but apply it into the various markets. It was almost kind of like a little double bottom and improvement. While the weekly volume has not turned expressly positive in the NQ or the futures, if we take a look at the cash market, it looks a little bit stronger. So again, we have the momentum bars making, see these momentum bars? They're making higher lows. It's showing that there was a little sense of improvement in volume accumulation in NASDAQ 100 sector index. Lastly, I want to kind of bring this next little indicator into focus for you. And this is the weekly advanced decline, cumulative weekly advanced decline of just the Qs. So what this suggests is that we're starting to see an uptick. Now let's change this back to daily time frame. All right. And it kind of looks something you can't see. I created years ago, how many? About 2009 to be exact. That's 11 years ago. A concept where I was looking for a smoothing variable factor out of the breadth, the advanced decline. And that's why I created and started to share and teach how to break down advanced decline of all the top stock 6 indices. We first created this with a platform on Genesis Trade Navigator in 2009, and then we transformed it and created it into TradeStation. But it's hard to see, but there was a little moving average crossover. The short-term yellow line is above the blue line, and now the advanced decline is above both values. That is what we call a positive change in the market. If we can get a close and maintain a structural close greater than the monthly and quarterly pivot by Tuesday. Well, I keep referencing Tuesday. Is it because it's Tuesday turnaround? No, it's because Tuesday marks an important point of a percent of the month of the whole of the month. And if we can close greater than the, and again, let's watch this. If we close a daily basis greater than where we opened the month after Tuesday's close, guess what? We have a very strong conviction of a market that's ready to see more follow through. Now, I didn't say it's going straight up, and we're definitely not out of the woods yet. All I'm suggesting is we could see a recovery back up to maybe right around this line in the sand. So we have a little bit more upside. And then what we do when we get there, that's the million-dollar question. Right now, we're enjoying an upside ride. The McClellan oscillator on a monthly basis, which we won't figure out till the end of the month, but it's looking more promising. It was extremely oversold, due for a bounce. Here's our bounce. I think you got some room to the upside going for another maybe 3 to 6% somewhere in there in both the Qs and maybe a little bit more, maybe 5% out of the SPYs. I also wanted to point out to you lastly about the Dow Jones Industrial Average, because every stock that's in the Dow is in the S&P 500, right? So what's running the roost here? Let's take a just a look-see at the daily, and this will help you with the structural event for the rest of the month, because we're looking at monthly charts, we're looking at data. And the data suggests that if we can get a close greater than the monthly pivot, and we need it by tomorrow, Tuesday, if we can get a close greater than the monthly pivot, and by Tuesday, if it's closed greater than the monthly pivot, it also closes greater than the opening range for the month, it signals that we should see more follow through to the upside for the month of April. How much higher? My guess is I'm only looking for probably about right in here, which is around the 250 mark, 248 to 254. Not to be too precise, but I'm looking for a little gap to be filled somewhere up in this region right here, and I don't think we're going to see that high for quite some time. And again, a little follow-through move up into that zone is very likely, especially in the Dow. What we do from there, more than likely, we see a downtrend. So look for a little bit more upside. You want to be focused in some, of course, staples, food groups, etc., etc. Yes, I'm avoiding the Russell, which is a growth sector stock. I don't see growth. A trade, maybe. Growth, no. I'm sticking with technology. I'm sticking with staples and select technology at that. Stuff like AMD, stuff like IBM, stuff that we need, cloud, data, storage, things that we need to make the infrastructure of America's internet work, since we're all trading from home. Thank you for listening. And again, we'll try to point out to you more things in the weeks to come. I wish everyone a blessed Easter. Again, it's not about just your health mentally, but also physically. And I hope everyone remains well from the COVID-19 virus.